What's up everyone, welcome back to a brand new video. We have a very important video here today on the Customized Insurance YouTube channel. We are going to be talking about premium tax credit, otherwise known as ACA Subsidies. I'm going to teach you about everything about how it works, what happens during tax season, and actually how you can use it to save money. So let's talk about it. Alright, so the first thing we want to talk about is what is premium tax credit. Premium tax credit is what actually makes your plan affordable. So if this thing didn't exist, if the government didn't give you this tax credit to help pay for your plan, then you would be paying for the plan outright, which could be $300 all the way to over $1,000+ a month, which is ridiculous, right? So obviously the law introduced a premium tax credit, which is a credit that helps you pay for your plan. And obviously at the end of the year, during tax season, you're either going to return or you're going to actually get some back depending on your income. But we're going to talk about that in a little bit. Now, depending on how much income your household makes, it will tell you how much premium tax credit you're going to receive. The more you make, the less tax credit you're going to receive, and the less you make, the more tax credit you're going to receive. So that's the general rule that you should know. But we're actually going to go through two different scenarios here. Number one is we're going to use the same age male and at two different income points, so you can kind of see how the premium tax credit affects how they're going to pay their plan, and how, like, the deductibles and out-of-pocket max. All of this changes depending on your income and how much tax credit you receive. So the first scenario, we're going to use a male, 25-year-old, same zip code, same everything, no dependents, just straight up by himself, making $20,000 a year, and the other one making $30,000 a year. It might not seem like a huge jump, but it is enough to completely change everything. So we're going to talk about it, and we're going to talk about what happens if you underestimate your income and you actually make way more than what you put on the application, and what happens when you make way less than you put on the application. Let's get into this. We're going to run this scenario. Let's get into the computer. All right, so we are in the official healthcare.gov website. We're going to quote a male, obviously same thing, same everything, 25 years old. We're going to put here the income is going to be, the first income is going to be $20,000, right? And as you can see here, this is an estimate. It says this is an estimate, but a 25-year-old male making it around $20,000 a year is going to get $382 a month worth of premium tax credit. Now remember this number. We're going to do a little bit of math here to figure out what's he going to pay and the difference between different incomes. So we're going to go to a silver plan, which gives you extra savings. Another video should be up on that because there's a lot to talk about there too. So for example, the first zero deductible plan is this one, $2 a month, zero deductible with AmeriHealth. It's an insurance company, right? So again, $382 of tax credit. Now if we go back and we actually change the income to $30,000, you're going to see how everything changes. $30,000 there. Now they get $326 of tax credit, so they're getting less tax credit. So I kind of want you guys to see how this affects all the plans and why you're maybe overpaying or underpaying, all that stuff. So as you can see, the silver plans completely changes, right? Look at this. What originally was $0 a month here is now $55, and the same plan that you saw at $2 a month is now $58 with terrible deductibles. So now you're going to have to, if you want to find a zero deductible one, you're going to have to scroll down until you find one that's good. But usually around this income bracket, the bronze plans are better. But this is not what this video is about. So there you go. That's how premium tax credit kind of works when you're enrolling through a plan. And just a $10,000 a year difference can make a huge difference when you're actually selecting a plan. So what happens now if you put in the wrong income, right? Let's say you're this individual and you actually make $30,000 a year, but on the application that you put $20,000 a year. So will you get penalized? What's going to happen? First of all, you're not going to get penalized, but you will have to return the difference. And now the difference is in right here in the $326 per month. So now what you want to do is you get the original, your estimated one, which was $382 premium tax credit. So if you go back here and you put the income, let's go back here really quick and put in $20,000. This is what happens if you mistakenly put your wrong income in. So you got $382 of tax credit a month, and now you subtract that by the actual income at the end of the year when you get your tax return, the market's going to send you a 1095-A with what you actually should have put, and they're going to subtract this from what you actually should have gotten and what you actually should have put in your application, which is $326 per month of premium tax credit. Now, if you subtract that, I already did the math here, it's $56 in difference of tax credit. Now, if you times that by 12 months, you get $672. So that $672 is what you're going to end up returning in your taxes at the end of the year if you underestimated your income and you actually put less than what you were actually going to make. So now what happens if you put over your income? Well, same thing, you're going to get whatever. Let's say in this case, you should have actually put $20,000 and you put $30,000, right? So you didn't get the help that you needed throughout the whole year to pay your plan. So now what's going to happen is at the end of the tax year, you're going to actually get returned $672 for your plan because you should have gotten way more help than you actually put in the application. So there you go. There you have it. That is how, hopefully that was not too complicated to explain, but that's kind of how it works. That's kind of how premium tax credit works and how it works in the tax season when you actually end up either returning or getting some money back through the healthcare.gov system. So there you go. That is how premium tax credit works. Remember, this is the help you get for paying your plan. And the more you make, the less help you're going to get. The less you make, the more help you're going to get. So hopefully you guys learned something. Also, there is a super detailed article / blog post that I wrote. It's on the link in the description or on the first comment that you must read about. It goes completely in depth into what I just talked about. So you have to check that out because everything about premium tax credit and the ACA subsidy is there. You're going to want to check that out. Also, I just want to let you all know that open enrollment is here. You have until January 15th of 2024 to enroll. So if you want to do that, then call the number on the screen, 305-970-8583. If you live in any of these states on the screen, make sure to give me a call. I will help you and your family get enrolled. Now is the time. So there you go. Hopefully you guys learned something. Thank you all so much for watching. I will see you all in another video. Take care, everybody. Bye-bye.